second question. It's a types of budgets, which types company may prepare, and how exactly company do this, and so on. So let's start. First question, what is the budget? We know that the budget, it's some plan of action in some number, in some money definitions. So it's a quantified plan of action relating to a given period of time. And the quantification of the budget is very important, because this quantification provides companies and managers opportunity to define target or planning purpose, and budget may be used for control, for monitoring how do companies aim their goals. So budget provides internal benchmark against which performance can be evaluated. So it should be noted that budget is not only a plan, but it's measurement of performance of the company and measurement of aims of the company and their aiming. Two main roles of budgets are, firstly, budget gives opportunity to provide some expenditure to manager, to incur some expenditures in the part of organization. On the one hand, it's an authority which provides this expenditure. On the other hand, budgets are comparators for current performance, as I told earlier. So on the one hand, it's a plan. On the other hand, it's like yardstick for measurement of goals of companies, and also they can be used for motivation of managers to aim some goals of company. And as we speak about budget, we mention budget period, and usually this period is 1 year for management purpose, but this period may change. It depends on specificity of companies, features of the companies, nature of companies, and type of expenditure, type of cost which company has. And this budget period may be divided into control period, and this control period also varies, and usually it's 1 month as the most optimal period of time in which companies and managers may control their budget and performance. Budgeting is a part of planning, and usually there are 3 types of planning: strategic, budgetary, and operational planning. And it's obviously that strategic planning has main aims to achieve strategic goals, to realize strategy of the company and aim organization's objectives. It's like a high level of planning. Then budgetary planning, it's like part of strategic planning, and it's aimed on the short and medium terms plans, how to achieve this short and medium terms. And operational planning about day-to-day business, day-to-day planning, and it's concerned with utilization of resources and how it should be reflected in the budgetary plan. To create budget, we can use 2 main approaches: the top-down approach and bottom-up approach. You can see it on the slide. The main differences between these approaches, it's direction which is used to preparing of the budget. So top-down approach is based on the idea that budgeting process starts from CEO of companies, from senior management. And they define goals of the company, some assumption, and then they predict revenue and expenses of companies and give this information for lower level of the company. And then this information passed down to lowest department of company. And in this case, each department should define their expenditures and how they will allocate these expenditures, but with the aim to meet the company's goals. Bottom-up approach, it's approach which based from movement of information from lower level to higher level. And budgeting process starts on the lower level, and then information is given to higher level and to supervisor, and then passed to upper levels of management. Both approaches have some advantages and disadvantages. And as we discuss, just one second, I finish my idea. As we discuss top-down approach, here we can have the problem that those who deal with expenditures and who realize operational process, who have deal with operational process, they don't make a decision about budgets. So because the budget is prepared by top managers, and these main disadvantages that those people may be not familiar with specific operation and expenses in each department. These disadvantages may be solved by bottom-up approach, but in this case, we have other problem that managers on the lower level may not fully understand the strategic plan of organization. So we have two sides. On the one hand, managers, top managers, CEO, may not be familiar with operational process, but on the other hand, these operational managers may not understand main strategic goals of the company. Is question still actual? Please, question.
Should I ask?
Yes, of course.
Ma'am, the previous approach, which you not the previous approach, the top-down and bottom-up approach, in any company there are senior management and board of directors. Okay, so the board of directors typically format the budgeting approach, and the senior management communicates its strategic goal or a company's goal. Then how come they can give it to the lower management for budgeting? Because they will not have any knowledge of the specific company budget, the lower management people. So does that contradicts your point on the top down and bottom up approach?
Yeah, you're right, but we can have different companies and different size of companies. If it's not very big company, it's a small business or medium business, so the main, even not manager, but even owner can may form this budget, and this then gives this information to lower level. And it can be used in small organization, but of course in big organization it's quite hard. That's why there are not only two approaches, there can be mix of this approach, and you can see combination. So guidelines and targets are from top managers, but budgets, operational budgets, it's a responsibility of lower level of companies. Also, we have such called zero-based approach, and this approach, it's like when each department should justify all costs all revenues, all types of budget, like from zero. Only those expenditures may be included in the budget which are justified by managers. But in this case, we have also some advantages and disadvantages. Sometimes managers should justify obviously expenses. They are obviously, but they should spend time, managers should spend time to justify them. So they spend time, they spend resources to justify obviously expenses. But when they justify these expenses, they can avoid or eliminate like unnecessary expenses. But also we not use this approach in clear form, only this zero-based budgeting and only these principles. So we can make like mix and try to find compromise and to use this zero basic approach only for some specific expenses that really should be justified. Next type of budgets are static and flexible budget. The main difference is that static budget is a budget that we prepare in the beginning of the period. And in static budget, we use some specified quantity of product. Flexible budget, it's a budget that we create in the at the end of period, and here we use real level of production or of sales. So like we recalculate our budget according to real quantity of products. Let's see it in the example. So we have for production of two types of products. We have here backpacks and purses, direct materials, direct labor, and variable overhead. Second column, second part of this table, it's about static budget. So in the beginning of period, we plan our cost according to some sales volume. You can see column D. And in column D, we can see quantity of these two products. Column C, it's about cost, budgeted cost. And last column, C multiplied by D, it's like the result. So these costs are in budget, and we plan to have such costs during our period, our budget period. And first part, it's about flexible budget. You can see that column B is a column which shows us actual sales of volume. For example, we plan to sell 72,000 of backpacks, but actually we sold only 71,600 of these backpacks. So we recalculate our budget, and we recalculate using only actual sales, but costs are the same. And in this case, we can find flexible budget for each point. For what? We can use this flexible budget to analyze variances, deviation in different indicators. For example, why do we have lower or higher cost? Is it related with quantity, or is it related with inefficient utilization of resource, or higher prices of resource, and so on? So flexible budget and its comparison with static budget gives us opportunity to find reason of variances in different indicators. Next, company has usually two types of budget. They are operational budgets and financial budgets. So operational budget. It's about day-to-day business, how to provide this day-to-day business. And financial budget, it's about cash flows, about income statement, and so on. Yes, please, question.
Ma'am, as in the previous slide, that flexible budget allows changes as per the sales volume. So under what situations do we identify that we have to shift from static to flexible budgets? Like, is this possible that according to our output of the company, we can keep on shifting and adopting flexible as well as static?
Flexible budget, like flexible budget, it's something in the middle between static budget and fact data. And flexible budget, we can compare with static budget and also with our real data to analyze why do we have some deviation, why do we have some variances. You will not use this flexible budget for making decision but this flexible budget will help you to find reason why do we have some results which are differ from our plan. So we it's not only comparison between plan and fact, we also compare plan and flexible budget, flexible and fact, and this gives us opportunity to find the reason of variances. But it's other topic, it's not today topics, okay? So let's go back for operational and financial budget. So here you can see this scheme, which shows us relation between operational budgets and financial budgets. So operational budgets include, firstly, sales budget, how many products we plan to sell. Then production budget, direct material budget, direct labor budget, overhead, selling and administrative budget, and these types of budgets we will discuss. And financial budget, you can see it's a cash budget, balance sheet, and capital expense budget. Today, I'd like to make focus on operating budget or operational budgets as a main and as a basic for preparation of financial budget and so on. So operational budgets, it's a part of master budget, and to prepare this operation budget, we should get a lot of different information about sales, about price of our product, about cost, and so on. Why? Because the more precise information we have, the more accurate information we have, the more accurate budget we will have, and we will more effective monitor our goals and analyze achievement of our goals. So first type of budget, first step in budgeting, it's a preparation of sale budget. So sale budgets shows us how many products we plan to produce in every period that we analyze. For example, here we have 1 year divided by quarter, and you can see expected sales every quarter. And according to price, we can see total revenue of company. It's only the plan that company has. So quarter 1, our total revenue 70,000. Quarter 2 is the same, and then we have some decreasing, some increasing in quantity, and according to this, we have higher total revenue. It's very easy, but the main problem here to define these expected sales. If we have some experience in activity, so if it's not a new company, we can predict, we can use previous information to predict this sales. if we create a new company, it's quite hard to analyze what demand will be for new product or for product of new company. Of course, it's quite hard. Next budget, second budget, it's a production budget. Why do we have sales and production? Because company usually wants to have some inventory of products or stocks of products in the end and begin of period. So company will not produce only those quantity that it wants to sell, because company has some inventory, and we should take into account this inventory and define how many products should we produce. You can see here the formula that number of units produced is equal goods sold, how many products we want to sell, plus ending inventory minus opening inventory. So we can see in the Q1 that we want to produce 1,000, we want to sell 1,000 units of product. And company wants to have, in the end of this Q1, 300 products. We don't have any beginning inventory, and it means that during Q1, we should produce 1,300 units of product. Ending inventory of Q1, it's a beginning inventory of Q2. So in Q2, in the beginning of this period, we already have 300 units of product. We want to sell 1,000, and in the end of period, we want to have 450 units of product. So how many products should we produce? 1,000 plus 450 minus 300. So we should produce in Q2 1,150 units of product, but we want to sell 1,000. So in similar way, we calculate quantity of production for Q2 and Q4. So we should take into account inventory of products. Next, direct materials budget. We need to define how many materials do we need to provide production of the product and how much it will cost. Yeah, please, question. Previous?
Ma'am, yes, ma'am. Ma'am, we can see that a production budget is dependent upon the estimates that are we making regarding the sales, right? And as we can see, for a couple of years, the sales estimate for every company, for every type of industry has been fluctuating a lot. So for any company or any business, if the estimation of sales goes wrong, then how do we handle that kind of discretion in the business? Because the budget will be completely, then it will go wrong. Budget estimates will that will be of no use then.
Yeah, that's why I mentioned that we should get very accurate information about all types of data that we use for budget preparation. And that's why I focus that it's quite hard to define output quantity of demand of product which we will sell, because if you make mistake there, you will have mistakes in next budgets. And of course, it can be not a real situation for a company. So when you analyze sales, you should take into account season, for example, competitors' behavior, and a lot of different factors to define how it should be. And of course, it's easier to make for organizations that has some experience, but for new company, it's quite hard. So you can make some assumption about maybe interval that it will be not 1,000 units of product, but it can be between 900 and 1,100. Maybe it's like give you some flexible in making budget, in making decision. Okay, one more question, please.
Hello, ma'am.
Hi.
How are you doing, ma'am?
Very well, and you?
Yes, I'm doing great. Thank you. Can I ask you something, ma'am?
Please.
Ma'am, do you think financial budgets influence operating budget?
One more time. Our budget is about a little bit slower, please.
Ma'am, do you think financial budgets influence operating budgets?
Operational budget influence on financial budget. Operational budget have some influence on financial, and I will show you how it will. Okay. So there is a very strictly relation, but firstly we have operational activity which is reflected in financial results. So that's why firstly operational budget, and then they influence on financial. Okay, and you will see it. Let's go back to our direct materials budget, and here we should define how much materials do we need and how much money should we spend for materials. For example, in Q1, we define that we should produce 1,300 units of product. We have information that each unit requires 3.20 pounds of materials. So we can calculate total pounds, how much materials do we need to produce product. But we also want to have some inventory of materials. Only company which work like just in time, which use just in time system, they try to not to have any inventory. But as we speak about traditional production, of course, we want to have some inventory to provide our production and do not have problem in our production. For example, we have some desired ending inventory and also beginning inventory. And according to this inventory of materials, we can calculate how much materials do we need. For example, in Q1, we need 4,896 pounds of material, and we know the price of these materials, and we can calculate total cost for materials. In this example, you can see that we have the same price during all year, and we have the same price per pound of materials. But in real life, of course, you can predict that the price of your material will increase, so you should take this into account. In this way, we can calculate how much money do we need. And this information we will use when we will prepare cash budget, because this is our total cost and we should pay it for our suppliers, and it will be our cash outflows, right? So it will be reflected in income statement and then in the balance sheet, because it's those sum of money that we should pay for our suppliers. Next, direct labor budget. Here, of course, we don't have any inventory. We just use information, how much time is taken for 1 unit of product, how much cost 1 hour of our workers, and how much money we should spend for labor. For example, 1,300 units we want to produce. Each unit requires 0.75 hours, and 1 hour of our labor costs $20. So we can calculate total direct labor cost. And then we should pay attention on next moment. We want produce during the year, not quarter, but during the year, 7,050 units of product. But we plan to sell only 6,000 units. Our sales budget shows us 6,000 units, but we should produce 7,050 units of product. So we will subdivide some of money that we spend for labor for products that we want to sell, and it will influence on income statement because it's a cost of sold product, and other part it will be labor portion of ending inventory, and we will show it in our balance sheet. So we will have in the end of period sold product and inventory of product, and costs of sold product will be reflected in income statement, but costs of inventory will be reflected in balance sheet. Next, we have overhead, and we also should develop overhead budget. Overhead are all types of production costs except direct material and direct labor. All costs which are related with production, but not direct material and direct labor. Yes, please, question.
Yes, ma'am. Good evening, ma'am.
Hello.
Ma'am, how we can reduce the labor budget?
Labor budget?
Yes, ma'am.
So you should know how much time it's taken to produce 1 unit of product. And if you know how many products you want to produce, you can calculate how much time should be spent. And if you know your wage of workers or price of 1 labor hour, you can calculate how much should you pay for your labor, for your workers.
Okay, ma'am. Thank you, ma'am.
So about overhead. Here we have variable overhead, and they are shown according to 1 hour of labor. For example, it's indirect material, indirect labor, maintenance, and so on. And you can see, so this overhead per hour. And also we have some fixed overhead per quarter. So during the quarter, we will have supervisor salaries, $50,000, and so on. And we should create this manufacturing overhead budget. You can see it also for each quarter and total. And we have, for example, indirect material, indirect labor, maintenance, utilities, and these points are calculated according to quantity of working hours. So it's related on those quantity of working hours that we calculate in labor budget. And it changed because of change of quantity of production and so on. And fixed cost stays the same during all period. And we have total fixed manufacturing costs and total manufacturing overhead. So during the 1 year, we will spend $131,863 for this overhead. Once again, we spend the sum of money to produce 7,050 units of product. So it will be 18.7 per unit. You can see it under the table. And we will sell 600 of units. That's why $112,200, it will be cost of sold goods, and other part, it will be part of finished goods and inventory in balance sheet. So how operational budget influence on financial budgets. So these types of budget are direct materials, labor, direct labor, and manufacturing overhead shows us costs which are related with production. But also we have sales and administrative expenses, and we should create a budget for this type of costs. For example, we have sales commission, $2 per unit, and transportation cost, $0.50 per unit. So it's not production costs, they are not manufacturing costs, they are related with sales. And also we have other type of sales costs like sales salaries, administrative salaries, marketing, insurance, and so on. And they are fixed. They don't depend on quantity of product. So there is no matter how many products we produce and sell, we should spend this fixed cost like salaries, like administrative, marketing, insurance, and so on. And here you can see sales and administrative expense budget. So variable part of this budget depends on quantity of products, and because we discuss sales costs, we use quantity of product of sales, not of production, but sales. You can see that we use here budgeted sales 1,000 and 1,500 and 2,500 and total 600. So it's a sales output. Variable expenses depends on this quantity. We calculate sales commission, then transportation, and we got total variable expenses. And fixed expenses, they stay the same, they don't depend on quantity, and every quarter it's $18,000. And we have total selling and administrative expenses. Pay attention that sales and administrative expenses, they are period expenses. So we have like two types of cost: production and period expenses. And sales and administrative, they are period expenses, and we should reflect these expenses in income statement. So it's not about production, that's why we will show it in income statement. And now let's compare budgeted income statement as a result of operational budgets. As we created all operation budget from sales to sales budget to sales and administrative cost, so we should take into account the quantity that we want to sell and quantity that we will have like in inventory of products. So we calculate that direct materials will cost $31,240, but we remember that 6,000 of product we plan to sell, and 1,050 units of product, it will be our inventory. That's why we divide our direct materials by two parts, and one part it's a cost of goods sold, 24,000, and other part it will be in ending inventory. The same with the labor. If we come back to our budget of labor, we will find that total cost for labor $105,750, and as we split this cost for goods sold and for inventory, we will have two numbers. And with manufacturing overhead is the same. And what we will have, that cost of goods sold $226,224 and $42,629. It's an ending of inventory. It's ending inventory. And when we will prepare our budgeted income statement, we will use only cost of goods sold, because our income depends on how many products we sold. So, for example, our sales according to our budget is $440,000. Then cost of goods that we calculate $226,200. So then we use our gross profit. Then sales and administrative expenses that are reflected in our budgets also. Then here we have uncollectible expense, but it's specific of this company. And we will have income, then tax, and we will have net income. So we use the result of operational budgets in income statement. And income statement is like a border between operational and financial budgets. It's like end of operational process and beginning of financial process. And I will not take your time and make focus on financial budget. I'd like to end just with scheme of relation between operating budget and financial budget. So you can see here that we calculate firstly sales, then production, and production budget includes direct material, direct labor, and overhead. And according to sales, we can define collection, our revenue. According to our production cost, direct materials, direct labor, sales and administration, we defined our payments, how much money should we pay for our suppliers, for our workers, and so on. And now pay attention that cash budget, on the one hand, has collections, our revenue, our inflows, and payments, our outflows. We use ending inventory to define how much cost goods sold, and according to all our costs, we can calculate income statement. And then according to these types of budget, we can make budgeted balance sheet. So here we combine financial budget and operating budget. Of course, in real life, system of budget is more complicated that we discussed today, but these are main types of budgets. And the main idea is to understand how we should prepare this budget, which principles we may use, and what is the relation between operational budget and financial result of company. It's only plan of company activity, but this plan gives opportunity to provide efficiency of company, performance of company, and compare results of company with plans, and find some problem in activity and define reason of this problem. Why do we have some variances in budget and in real life and in fact indicator? So that's last slide for today. And if you have questions, you can ask or you can write, please.
Good evening, ma'am.
Hello,
Good evening, ma'am. I am Ashish Kumar.
nice to meet you.
Yes, ma'am. Nice to meet you, ma'am. I am going through all. I'm going through the session, and I have some doubts you might clear, ma'am. Ma'am, we make budgets in the beginning of the year. So,
Yeah.
ma'am, we can compare the means we can prepare our budget in the beginning of the year, and we can later on compare what the our companies is going, like comparing like what we have made and what our company's position is. So, ma'am, we can say that we might go wrong, and if we go wrong in our budgeting or real position, then how can we uh, uh, correct this? Means like we have to make a budget again, or ma'am, we have to go with that same budgeting what we have made prior.
Mhm. So yes, we prepare budget in the end of in the beginning of the end in the beginning of the year, excuse me. But so you know, such like financial year, and of course, financial year it can be different for different companies, and it depends on activity of company. For some company, financial year starts in September, or budget year starts in September. For other, for example, for university, if you want to prepare budget for university, and for example, in our country, studying starts in September. And of course, all plans start from September. For other company, it can be January or maybe June. It depends on activity. And also it's depend of nature of organization, the type of product, what type of products do you produce? And maybe it's more rational to prepare budget, for example, only for months. And like reanalyze budget every month. Maybe you have such dynamic company and such specific product that for you it's quite hard to make long-term budget, and you're not ready to predict activity of your company during the 1 year. Or maybe it's like startup or new company, and you want to analyze only small period, 1 month or quarter, and after 1 quarter you make some control and prepare new budget. So a company may prepare budget for year, subdivide it for quarter, for months, and even for week. And for example, like budget for 1 year, it's like general vision of company. But budget for first month or budget for 3 months, for quarter, more precise, more accurate, more detailed, and in the end of this period, you prepare a budget for next period according to your general vision, to your strategic goals, but use experience of previous period. So it depends on your company, on your product, on your specific of market and demand. Maybe you have some product which depends on season. Maybe you produce ice cream. So you should take this into account that in the summer you will have higher demand and it will be other costs for production and so on and so on.
Yes, ma'am. Ma'am, I have one more doubt. Ma'am, we make budgets on the prior data, or we just imagine a numbers to make budget?
For a project of
Ma'am, like we have to prepare budget in the beginning. So, ma'am, we can use prior data, means we have historical data of the companies. On the basis of that, we make budget, or we imagine just a situation, means this year we need this much of sales or whatever. Or
it depends on those strategic goals that you have. Maybe you don't want to change anything and you want to work similar way that you worked previous year, but maybe this year you have a new strategic goal, you want to launch new product or enter new market, and of course you should take this into account. So budget is only budgeting is only a tool for providing realization of your goals. So what is firstly, your strategic goals, your aims, or your budget? If you want to achieve something, if you want to realize some strategic goals, so you will develop your budgets according to these strategic goals. Of course, taking into account your previous experience, because you may not establish some strategic goals without any experience. So,
Yes, ma'am.
okay. Other questions, please.
Ma'am, Ankit Tiwari this side.
Yeah.
Hello, ma'am.
Hello.
Ma'am, I have written down some components of the budget which you were also explaining. One of them was the assumption which we assume, or the basic assumptions which any company takes while performing a budget. Second is it's a drivers for operating a company. It operates with the help of budget. We can operate efficiently in any company, be it small or large. Third is ability to roll forward the model. This one I was having doubt because like you said, in top down approach or in bottom up approach, it depends on the large companies and small companies. Small companies, the senior management decide itself, but in large companies there are certain board of directors as well which are involved in decision making. So in the ability to roll forward the model, what exactly model do they analyze or do they use to calculate the future or the expected value of the budget? Like one of my colleague asked about the historical method. I know about the historical trend which companies use, but I am having doubt what will be the future trend. I mean, what will be the expected value which they will analyze to get the perfect number or the accurate number per se.
Yes, of course,
So
you should.
that was my doubt, the rolling forward model.
So you should use, of course, a lot of information, different information, but also you should take into account, for example, external circumstances and how it will influence on your company, right? So if you work in some stable economy, it's quite easy to predict something. For example, in our country, we have not very stable economy, and we have some specific problems which are related with our neighbor. And for example, now all businesses like waiting what will be further, what future we will have, and nobody knows. And in this, of course, it's quite hard to make any prediction, right? Or, for example, some laws, some regulation from state regulation, right? And it will also influence on the activity of the company. So it depends of a lot of different factors, and of course you should take them into account. So in the stable economy, it's quite easy to make some predictions and make some assumption about your activity, right? But you should take into account not only internal circumstances, not only those information that you have inside your company, but also external information, because all markets are interrelated, and decision in one market will influence another market, and how it will influence an activity of your company, and so on. So the budget is only like the result of great analysis of different data and different information. It's not quite easy, like, oh, I will write that our sales will 1,000. Why 1,000? Why not 2,000? Why not 500? Please justify. Why do you think so? Justify the price, justify the costs, and so on. So why do we have such quantity demanded for our product? We should justify this, we should analyze it, and so on. Okay.
Okay. And another question was,
and moreover, Professor, if
according to you, I want your opinion.
just
Yeah. Sorry.
We
Ankit,
have,
just wait. Can you hold for a moment?
Yes, sir. Yes.
Dr. Helena,
Yeah.
can I add value if you allow me?
yeah,
Ankit, as Dr. Makhova is highlighting, beyond a limit, no model, works. Everything is every organization is a system which works within a larger system, which Dr. Helena is highlighting as an external environment. Okay, so then you have to take all these phenomena into consideration. It depends upon the volume you are running a system. Say, for example, there's a multinational company. Okay, it's running in more than, say, for example, 10 countries or 20 countries. Now, as Professor was highlighting, that depend upon the law of the land also sometimes. Sometimes some countries deliberately impose a lot of tariff duties, isn't it? To just fight with the anti-dumping policy of some other countries, like China, what is doing. So that depend upon the availability of raw materials you are using, to produce your services or your products. So that depend on so many other factors, Ankit. No model works. Look, ultimately, whatever budgeting you are doing for the year to come, prediction is a prediction, forecast is a forecast, right? It has to be flexible. It has to be designed in such a way to accommodate the environmental influence on it. Only then probably it might work. Say, for example, before 2020, nobody would have imagined that there would be something called COVID and everything will be closed down. So whatever the forecasting, depending upon the previous data might have been done by the conglomerates, is of no use. Right. So environmental scanning for the accuracy of the budget preparation is much more important. This is what I believe. And Professor was highlighting is correctly. Thank you, Professor.
yeah, thank you. Yes.
Ma'am, just one last doubt, ma'am. I want your opinion, personal opinion. So everyone knows about the 2007-8 financial crisis. So according to you, bigger companies, big multinational companies failed in that era, in that period. So was it the fault of only senior management, or there were some other parties or other third parties involved in the huge systematic risk which happened in 2007 or 8 financial crisis?
What do you think about it? Do you have answer for your question?
Yes, ma'am. As sir explained. Yes, ma'am. I have the definite answer. I just wanted your personal opinion. Then after that, I can obviously give you. If you want, I can first, say my answer. So as sir said, there is no perfect forecasting. No one knew COVID-19 would come and we will, work online. No one knew that. But at that time, everyone were speculating that there will be a systematic risk, there will be a huge loss, but no one cared because they were only looking for short-term profits. So that is one of my opinion. Just because of short-term gains, they just went with the flow, and such thing happened. This was my opinion.
Okay. I have a friend of my family. He's financial director of one big company in Ukraine. And at the end of the year, like November and December, he is absent because he prepares budgets and he protects and justifies this budget. And it's very, very precise in this company and very complicated work. So it's like, I cannot meet with you, I cannot answer your phone call. I don't care. I have a budget, and I have a budget. And in the end of the year, they compare budget with fact, and he says that they are quite close. So the level of budget and the level of forecasting of in this company. But it's really great job, great work, and great period of life to prepare this budget. For example, my husband provides a budgeted system in insurance company, and there are a lot of departments and branches, and he has very complicated system of these budgets. And because it's insurance company and they have main office, and main office doesn't generate income, only generate costs, and how it will be spread between among all these departures and so on and so on. And also in the end of the year, they compare budgeted numbers with fact, and why do we have some variances and so on and so on. But it's quite complicated, but not so precise and accurate as my friend in medical company. So in medical companies, they have very strictly, very accurate budget, and each grivnas, each money unit should be justified. Each 1 grivna, each $1 should be justified. So this approach of company. In other company, we can meet approach $10,000. Okay, it's not a problem. It's like variances. So it depends on concept of company, concept of management, understanding of managers, what they want to achieve, and which tools they will use to achieve these goals. Is it important for us that we will have plan and fact and they should be equal? Or it's $10,000, it's not a problem for us. It depends only on these factors, and does management want to have such precise data and information and prediction?
Thank you, ma'am.
And Ankit, probably if your question was regarding with the recession, was that related with the recession 2007-2008?
No, sir, not recession, but what was the main core or main crux of the problem, and how did it happen? Who were the players involved? Because till now, no one exactly know who were the players, big players involved. One of them was JP Morgan, which I know, but not everyone were caught because they were, already gone with their money, and they were already having some of the bribery.
Ankit, what happens, Ankit, what happens, when the system acquires a critical mass, no one person can control it. It has its own pace to control itself and to run itself, right? So whenever the economic crisis like recession or something like that happens, it is not because of only one or two people's reasons, or no one or two people, no one or two organizations are responsible for that. It's a cumulative effect of so many other dimensions working in the economic sphere of a country or of a globe. And now the problem is that because every country is linked with another country, so one thing is happening in one country, it might affect the other countries also, right? At a larger pace, which was not the case in the past. But now it is like what was happening in Afghanistan. If you see what has happened in Afghanistan just a few months back, it has affected the Indian economy like anything, right? Many things we procure from Afghanistan. Nobody could have even thought of 4, 5, 6 months back that it is going to be like this now. Like what is happening in the Middle East. I'm not getting into the political reasons for that, but what I'm trying to highlight, when a system means economy of a country, economy of the globe, it has its own critical mass, it has its own rule which nobody controls. Right, so that's the reason you can help probably one or two larger organizations apparently looking as if they are responsible for one shrinking in one country or one debacle in the economy of a particular region. But it's not the case in totality. It's not the reality. Reality might be much larger than that. And my personal opinion, sometimes it is fabricated. Sometimes it is done deliberately. I'm not an economist, but I believe sometimes economists, they play with the data and they present the picture. Say, for example, if I'm recalling the Mexico crisis, which happened in 1997, 1998, I suppose, every economist used, you hear to them, isn't it? They used to say, it is going to be like this, it is going to be like that, and the world is going to be closed down, people will starve, they will die. Nothing happened. You see what has happened with the Greece. I'm not saying economic crisis, they don't have impact on the life of the people. Of course they do. And no one person is responsible for that. This is what can I add. Okay, so shall we go to this? It's a long debate. We'll have a zero session someday, probably faculties from Kyiv University, and we can have a chat with us. Okay, let's go to the next question. Ujjwal, please ask your question.
Yes. Good evening, ma'am. My name is Ujjwal Thakre.
Nice to meet you.
Thank you, ma'am. Nice to meet you too. Ma'am, my question is, while we were talking about rolling forward model, what will happen if sudden change is observed in any organization? Will it disturb the overall budget, or can we observe some injectors which will make a balance between this change, which will cause because of sudden trend change?
What is the balance between budgets and, can you repeat, please, a little bit slower? Because
Yes,
of
ma'am.
our specific accent, maybe we not always can understand clearly.
Yes, ma'am. Ma'am, what will happen if sudden trend change is observed? Will it disturb the overall budget, or can company add some injectors which can stabilize the budget because of trend change?
I think it depends, once again, it depends on company and on management of company and those approach that management used in this company. So every case is specific and depends on different factors. And of course, you should take into account the concept of management and what management led you to do in this company and what information they want to use and so on. So it's very specific in each every case. Okay.
Yes, ma'am. Got it. Thank you.
Yeah, thank
There
you.
has to be a contingency plan, Ujjwal. There has to be. If there is no contingency plan, probably the organization may end up in getting the chaos, you know.
Maybe yes. Yeah.
Okay, so if there is no question, shall we call it a day? It was quite interesting and very interactive session. I'm happy the way the students are coming forward to talk to the faculties in this recent session. Okay, so, is there any question? Anjali, do you have any question?
Yes, sir.
Please ask.
Good evening, ma'am.
Hello.
I'm Anjali. I have a doubt. Ma'am, are fixed budget useful for control purpose?
Not only for control, but to monitor the way we achieve the goal. It's like tools to not to control activity, but control the way of achieving goals. How do we move to our goals? And do we stay in some boundaries, or do we should change something in organization to achieve our strategic goal? So it's like if you want to invest some money and you want to have some money, you can make your own budget and you will check, do I act in the boundaries of my budget, and I have some money to spend and some money to invest, for example, on to keep, yes? And you can use this budget to compare and to check your way to your aim. Okay.
Okay, ma'am. Now it's clear, ma'am. I also have one more doubt. Ma'am, what are the difference between static budget and flexible budget?
Static budget, you calculate for those quantity that you plan to produce or to sell. For example, I'd like to sell 1,000 units of product, and I calculate my cost according to this quantity. Flexible budget, I can recalculate my budget according to different quantity. For example, I will have all data the same, but change only quantity. For example, I have some costs, budget costs, I have budget quantity, I have budgeted total cost. But when I use flexible budget, I change only a quantity. And I recalculate my cost according to my new quantity, but with budgeted cost. And then I can compare it with fact costs and compare and find why do we have variances. So flexible
Now it's clear, ma'am.
like for other quantity, only for other quantity. Only for other quantity. Not we don't change price of resources or costs for resources. We like calculate what will cost if we will have other quantity, and it's flexible. That's why it's flexible, because we can recalculate it for different quantity.
Okay, so I think we can take
No,
two more
it's clear, ma'am.
questions. Two more questions, last questions, two more questions, last, because we have the time limitation also, friends. I'm liking the way the session is getting into the discussion mode, but we have the
Yeah.
time limitation also. So I think, Sandeep, you have not asked your question. You can ask your question.
Yeah, yes, sir. Good evening, ma'am. Ma'am, my name
Hello.
is Sandeep. So, ma'am, I wanted to ask, like, as you told us about the approaches for budgeting. One was from top to bottom, and the bottom to top. According to that, you also mentioned about the overheads, the variable overheads. So, so to minimize those variable overheads or any wastage that has been occurring, so which approach can we use, which is efficient to minimize those overheads?
Which approach is more comfortable to you and for your organization?
Yes, ma'am.
So
Which one would
you can use mix of this approach. For example, your top managers define the main strategic goals, and together with operational managers and managers of department, they discuss the boundaries of this budget and so on. It can be like mix of this. So it not should be only this approach or this. You can combine them and make like mix of this approach. But what's more good for you? When, for example, your father gave you money when you were at school, and say, for example, this sum of money for you during the week, or when you told your father, I need some sum of money for a week. It's a top bottom and bottom up approach. What is the better? In one family, it's better when father gives money and father defines how much you can spend. In other family, it's better approach when child tells parents, I need some sum of money. But second approach, I need, but I can give you some money. Let's have a deal. Right? So it's a mixed approach, the same in company. So you can mix this approach and combine them. And you should use those approach which will help you to achieve your goals of company.
Yes, ma'am. Thank you, ma'am.
Okay, so today's last question. Kshama, please ask.
Ma'am, if you don't mind, my question is not related to today's topic. Can I ask?
Yeah, please.
Ma'am, as we know that you are a certified public accountant, what qualities or what major specific qualities you would suggest that any student should have to crack this exam?
What quality should have to pass the exam? What exam?
To pass the CPA exam.
Hard work.
CPA? I know about CIPA for accounting, for accountant managers. Do you mean this?
Yeah, she's asking that what she needs to do to qualify that.
Study and study and study. Yeah, it's only one way. Only one way to practice and to study.
That's great. That's great. So with this, that was a quite interesting session, very interactive. I must say the students are, coming out of their cocoons and they are finding it's, comfortable with talking with the resource persons now. In the past few sessions, I'm observing that that's a good trend for such kind of sessions, and it motivates us to organize such kind of sessions. So with this, at last, I'd like to propose my word of thanks. I'm thankful to the top management of ICFAI University, Honorable Vice Chancellor, Sir, Professor Dr. Ram Karan Singh, our Registrar, Brigadier Rajiv Sethi, Sir, and my sincere thanks to Dr. Yelena for taking initiatives and, taking a lot of pains to organize such kind of sessions and being a motivating factor to have this memorandum of understanding between these two universities. And my foremost sincere thanks for sparing time to deliver today's talk to our expert, Dr. Helena Makhova, for delivering such an excellent, such an interesting, and such an interactive session to the students. Thank you very much, Dr. Helena. And I also thank my IT team for organizing this kind of sessions on the virtual platform. And my sincere thanks to, last but not the least, for the patient listening and the interaction and the quality of interaction they have with the resource person today. My thanks to students also. Thank you very much. Thank you, everyone.
Thank you very much. Thank you for invitation. Thank you, Elena, for second invitation, and thank you and your students for great questions, for a very interesting discussion. And I really enjoy this session. Thank you very much.
Thank you, ma'am.
Thanks
Thank you,
a lot.
ma'am.
Thank you.
Thank you.
Arun,
Thank
we
you,
can-
ma'am.
Arun, we
Thank
can
you,
close the
ma'am.
meeting now. Bye-bye.
Oh,
Arun, we
bye-bye.
can close the
Bye-bye.
meeting now.
Bye.
Arun, are you there? We can close the meeting now.